Good morning, happy Friday, and welcome to Sunrise Small Talk episode number 85. It's tax season. See, right there. Sorry for what I said during tax season. Got the special mugs out for this time of year. Today I'm going to show you something pretty cool that I'm not sorry about. It's how you can make about $120,000 a year, 10 grand a month, tax-free. Now there's a couple requirements. You've got to be a senior over age 65, and income has to come from different sources that are pretty common, such as Social Security, capital gains, qualified dividends. If you're not a senior and your income is over 120,000, that's okay, because the same tool that I use to figure out this math is what I use whether you're making $250,000 a year, if you're a business owner that's just crushing it right now, making $1 million a year. It's the same tool, different inputs, different outputs. This particular video, I'm going to show you how, if you're a retiree over 65, how you can make 10 grand a month tax-free with our help. Let's check it out. All right, so to start, I'm going to show you what this looks like on my back end, on my piece of paper. This is a hypothetical client, Travis and Taylor. Travis is a football player, and Taylor, former football player, and Taylor is a former musician, and they are both retired and in their late 60s now. So I plotted out their ordinary income on my little chart here. Their ordinary income consists of Social Security, and then I plotted out their capital gains and qualified dividends. Now this chart is for me because there's a lot going on, pretty confusing. I like sharing these charts with CPAs, but not typically with the client, because as you can see by that, there's a lot going on and that will just confuse things. But okay, let's start. Taylor and Travis have a combined Social Security of $79,500. So that's pretty good, right? Almost $80,000 a year off Social Security. So is that taxable? Is Social Security taxable? Well, I do a ton of presentations and videos on that. If you care to know more, just let me know. But I'm just going to tell you this. Of that, $38,750 is taxable, but after the standard deduction, you would owe no tax if that was your entire scenario. Now, Taylor Travis, they said, well, we can't quite live on $80,000. I said, that's okay, because you have this portfolio that's generating qualified dividends and has some capital gains. We can sell, trigger capital gains, which typically will trigger taxation. But in this scenario, mapped it out on this chart that I just showed you and figured out how much they can pull out in capital gains without paying any tax. And that number comes out to $44,000. So up top, we have their Social Security, and then down here, we have qualified dividends and capital gains. That's a total income of $123,500. Once we're at this point, we're at $123,500. It looks like that's a pretty nice income, and you may be thinking, well, I can live off that, a little over $10,000 a month, but then I'm going to owe tax. So really maybe that number is $7,000 or $8,000 a month, which I can't live on. But because we plan this the right way, and because we have these massive standard deductions in 2026 and for the next few years, we're able to subtract from that income before we figure out what we owe in tax. You get to take this standard deduction, whether you are 100 years old, whether you're 18 years old, it doesn't matter. You're able to take the standard deduction. The standard deduction is $35,500. Okay, that's pretty cool. If you just ran that, if you took these numbers to your CPA, you're still going to owe a little bit of tax. But because our former football player and our former artist are over age 65, in my scenario, they get to take another $6,000 each, total of $12,000. So they get a combined standard deduction here of almost $50,000. What is that? $47,500. Okay. Now you're looking at this and you're saying, okay, we had $123,500 minus $47,000, $47,500. There's still income there that's going to be taxable. What's that taxed at? 10%, 12%, what is it? The answer is 0. And that is because of these little charts that I showed here. Where the income falls matters. So again, whether you're a Taylor and Travis, and this is your scenario, or you're a business owner making 7 figures a year, we need to map it on this chart so we can figure out where you're drawing your sources of income and if there's a better way we can do it so you get the same income, get the income you need to live off of, but pay the lowest amount in tax. That's why it's important to send us over your tax returns, upload them in the portal so we can run them in their analyzer. If we don't have the tax returns, we can't do that. Therefore, we cannot deliver any benefit when it comes to reducing your income tax each year. Why is this a 0 tax bill? Because $79,500 is from Social Security. Not all of that Social Security will be taxable. We're actually increasing the amount that's taxable by bringing in these qualified dividends and capital gains, but these are taxed on 2 completely different tax systems. This is going to be taxed in the ordinary income tax system. This is going to be taxed in the capital gains tax system. While they are 2 different systems, they do talk to each other, and what you do here will affect what you do here, and what you do here will affect what you do here. But there is a balance point where we can draw income from various sources to reduce that taxation, and that's what the tax chart does there. And in this particular situation, we are getting that capital gain down to a 0% capital gain tax, and that Social Security down to a 0% ordinary income tax. So there you have it, how you can make 10 grand a month if you're over 65 and not pay any tax on that. Take care, have a good weekend, and we'll talk to you soon.